morning, ladies and gentlemen. A very warm welcome to you on Market today on this lovely Tuesday morning in Delhi. We have been in an uptrend over the last 3 days as far as the Nifty is concerned. It ended at 24,572 for you. As far as yesterday's trade was concerned, up 31 points. There was a mild red tick as far as the Bank Nifty was concerned, down about 150 points at about 50,368. With this background in mind, ladies and gentlemen, let's now look at the construct of the market that is in front of us, as in terms of cues that are coming in from overseas, as to how the local market is structured and what are the likely implications for these cues on today's trade. Let's start with this very strong uptick that you've seen on Wall Street, coming especially on the major indices, Dow Jones as well as the S&P 500. You've seen a very strong rally which has now beset Wall Street. Strong gains coming into sectors within the Dow Jones index. You have the Nasdaq Composite ending 1.4% higher. The Dow Jones Industrial Index was up 0.5%, and the S&P 500 rallied for the fifth session in a row at about 5,608. It's just shy of an all-time high. All the possibilities of a rate cut in September are now getting built into equity prices. The risk on trade globally is in place. The cues that are coming in from the US 10-year bond yield, crude oil prices, as also gold prices are muted, and they favor equities, in the sense that all these three are sort of in a mild downtrend, and that's beneficial for local equities, especially India, and especially on the crude oil side. It's also the Fin Nifty's weekly expiry today. This index has moved about 1.2% in the past 5-7 trading sessions, and for the moment it's Shriram Finance and Power Finance Corporation that are top gainers in this index, up 6.2 and 4.9% respectively in the past week. What's down? It's ICICI Pru Life. The stock futures down 0.7% in the past 5 trading sessions. Nothing to be worried about, mainly because this is a record high where Pru ICICI Life is consolidating. Apart from that, a lot of sectoral rotation is seen in stocks, money moving consistently out of defense counters such as Cochin Shipyard, Garden Breach, Massgaon, Hindustan Aeronautics, and a host of other defense counters, and shifting towards valuations which were muted relatively, especially in the pharma space. So pharma and software sector continue to attract bulls on the Lal Street, and all of them, especially frontline pharma and mid-cap IT such as KPIT Technologies, Birla Soft, Persistent System, Emphasis, all of them are doing pretty well. What else is likely coming into the market for today's trade? You see a lot of profit booking happening in defense counters, and of course PSU banks will be in focus. Yesterday's finance ministry meeting with heads of regional, rural, government-owned banks and PSU banks has likely to see a positive impact coming into prices, just as it was yesterday. In terms of individual stocks, we'll keep an eye out on Zomato. Remember, this has been one of the top traded counters over the last 5 or 6 trading sessions. Today, a very decent block deal from one of the original promoters of Zomato, which is the Chinese company called Antfin, is most likely to take place in the market. The size of the transaction is estimated anywhere between 500 to 556 million dollars. That's roughly about 4,500 crores to 5,200 crores. Keep an eye out on this one. Antfin, which has about 4.2% stake in Zomato, will be selling 1.54% stake in this company. Needless to say, this counter was at a record high yesterday, ended mildly in the red. The price that has been set is at 252 rupees for the transaction. The stock closed mildly higher, about 5 rupees up at 262 rupees yesterday's trade. What else should be on your radar? Polymedicure. This is a counter that rose about 14-15% in yesterday's trade. The company has announced a 1,000 crore rupee QIP at a price of about 1850 to 1880 rupees per share. Keep these two stocks in focus, as also you have Hindustan Zinc, which is has its OFS open for retail public, as also the board will meet for the second interim dividend in FY25. So these are the 3 or 4 stocks that I have in mind, and I'm keeping my eye on them. But this is as good a time as any to welcome Mr. Dharmesh Kant, Head of Equity Research at Chola Securities. Good morning to you, Dharmeshji, and a very warm welcome to you, sir. How do you see sentiment on Dalal Street on this Tuesday morning? Strong cues coming in on from Wall Street, but range-bound trade seen on Nifty and especially Bank Nifty. What looks good? What looks interesting?
Namaste, Shailji. Good morning to all our viewers. Sentiments continue to be positive. I mean, the simple strategy which has been a buy on dips. So even if you are buying on a small correction in market credits further, eventually you are better off after say a couple of weeks, and the market is climbing all, also worry. So there is no fear as such, and I'm in interaction with most of the institutional team or the fund managers or super HNI clients. They are just seeking ideas where fresh money can be deployed. So I don't think liquidity is at all a concern. In fact, it's a concern from the other point of view, because it is creating a lot of valuation mismatch when the stock prices are jumping hard and fast. So that is how the texture is. The sectors which were the favorites of the market earlier continues to be same, and that is precisely people are finding opportunity in the public sector space. So it can be banking, it can be railway infra, it can be defense, or it can be capital goods segment. Wherever they are finding an opportunity, that is where the buying is happening. So, and US, I think till the Fed policy is announced, I mean, mild volatility may still be there, but the trajectory again remains upward for that side of the economy. Again, the concern there is even S&P, if you look at the valuation multiple, it's at now 23 times 1 year forward price to earnings. Historically, it has never traded at such high valuation multiples 1 year forward. At the same time, the various estimates, the Bloomberg consensus estimates suggest only 5 to 7% kind of an EPS growth. So that is again a worry. I think 2-3 months we can still see a good run up till the US elections are there, and global sentiments can pitch our market also into the good frame. But to my mind, we are entering into our last leg of this super bull cycle which we are witnessing before time correction for consolidation sets into the market. So I am finding November to January a type of a bit difficult for the market. Market may oblige earlier as well, but texture remains, it's a buy market right now.
Right. With this background in mind, Dharmeshji, when you last met us, you had mentioned that Cholamandalam Securities would be coming out with a list of stocks which should be purchased in piecemeal fashion, systematically investing in them, and you were very kind to share that report with us. It's dated August 14, but the stocks are as good as any. If you could just enumerate 1 or 2 stocks which you feel they make sense at current levels based on the research that you've done.
Thank you so much, Saili, for the appreciation. I mean, all the idea going into the stock selection was the valuation comfort and the sustainability of the cash flow and earnings. So we were not looking for growth opportunity when we were selecting a stock. So growth may still be less. Earnings growth may not be say 20%, 25%. We are happy even if it delivers 10-12% kind of earnings growth. Sustainability was the key concern, and the ROEs, so return on equity, should be high when we were selecting such stocks. So 2 stocks which stands out, hands down on both these parameters. One is the Natco Pharma. Basically, it's into the CRAMS business, CMS part of the medicine business. Oncology, I mean, it is one of the top 3 players in the oncology space. 76% of its revenue comes from overseas, and they are continuing with the order inflow. If you look at return on equity is well above 30%, and it's trading at 15 times PE multiple. So quite cheap when you compare this company with its peer group. and has been a consistent compounder as far as cash flow and earnings is concerned. So that is one stock, in spite of a recent run up, last 3 4 months it has done a good run up. Still, we feel there is plenty of scope out there. Even if it is re-rated to, its peer, 20 30% kind of a gain in a year's time is very much on the cards. And the other which we picked up, we had an interaction with the management yesterday. So another detailed note will follow on this company is Narayana Hurja LA. So there again, it's a hospital business. Valuations are pretty cheap. It's trading at around 27, 28 times P multiple, where the other hospitals in the same basket is trading at above 60 to 100 times kind of a P multiple. It has a good ROE, 30, more than 30% is the ROE of this company, whereas any other hospital, even Apollo, is less than 20% kind of an ROE. Management is sounded very solid on their, development and growth opportunity, and the concerns about health insurance, they're, falling into that, though that is 2 3 months away from now. I think that should not be the concern at all, because their strategy is totally different from a general health insurance player in the market. So, I mean, they would be very inward focused when they are rolling out this health insurance policy. And there again, a valuation gap with a consistent compounder, stable earnings, kind of people are now opting for more elective surgery. And see, the pockets in which this hospital chain operates is East India and Bangalore. And East India patients are very sensitive. There, the credibility and name carries so much weightage, and they have gained very much traction out there. So these two companies, I think, should be accumulated. You are safer off, even if the market corrects. The stock prices won't correct that much, and rebound would be faster. Again, 20 30% kind of a gain from a year's perspective. And SIP method is what is recommended in this market, because we don't know when time wise correction will take place or actual correction in index happens. To the best of my mind, what I think is the fair valuation of Nifty for this year should be 22,000. So I am having that bent of mind when we are coming out with buy recommendations on the stock.
Okay, just to repeat, ladies and gentlemen, the two that have been picked up by Dharmeshji are Natco Pharma, already at a record high, but valuations are extremely attractive compared not only with its own peer set in the drugs business, but also in the wider market. The other one he's mentioned is the hospital chain Narayan Hirdale, and both have to be accumulated on a monthly basis or a weekly basis. Buy small quantities, be consistent buyers. If you see the red tick in the counter, do not be afraid to put in your monthly SIP in these two. Of course, holding periods will be in excess of 2 2.5 years, and that is what you need to do in this healthcare plus hospital diagnostic space. Dharmeshji, we also had this meeting with the Finance Ministry of public sector banking chiefs and regional rural banks yesterday in Delhi. What do you think is the roadmap within the PSU banking basket at a time when there is this mad rush for long-term deposits to improve CASA, and of course the impending credit boom that we are seeing? Any PSU banks do you think are worthwhile at current prices?
Yeah, I mean, our country is faced with this challenge of maintaining a CASA banks for the banks, and that is where I think RBI won't be in a position to cut any interest rates, because you need to have a better deposit rates to keep this CASA thing intact. And the type of returns people are getting from the equity market, it will again be a challenge, because we have clearly seen the decline in, there's a direct correlation between decline in the deposit base and in the increase in the SIPs which is happening out there. So it will be a challenge, because the markets are going to be fine for quite some time. As far as PSU banks are concerned, the only worry was the ALM mismatch, which they have sounded. I mean, Ministries and the bank, everybody has sounded about that. But I don't think as of now they are in that spot. It may be nearing to that spot if the consistent drawdown on the CASA base continues. So, but as of now, they are better safe, and credit deposit ratio for most of the public sector bank is well within manageable limits. It's less than 85%, whereas private sector peers like HDFC and all is more than 100%. So that is where I find value in couple of public sector bank space, both on valuation multiple as well as the asset quality and the other parameters which went through by the Q1 earnings update. And that is Canara Bank and Bank of India. So Bank of India is trading at 0.6 times price to book value 1 year forward. Canara Bank is trading at 0.9 times price to book 1 year forward. Both have shown consistent improvement in the asset quality. Quarter on quarter, if you look at, Bank of India even delivered a better deposit growth than the credit growth. Canara Bank missed slightly in line with the other banks. So there we find value on the valuation parameters. And again, same concept, because whatever in this market, if you are going to buy, don't go for a blanket buy. Stagger your buying at regular intervals, and that way the cost will be minimized. At the same time, you can have a better return. Here again, the objective was same, around 25 to 30% kind of an upside we are seeing in a year's perspective on both these banks. So I don't find much trouble coming into this space.
Okay, so these are the two stocks, Canara and Bank of India, which again have to be accumulated in SIP fashion. According to Cholamandalam Securities research led by Dharmeshji. Dharmeshji, my final question on good stock picking. IT has been the cornerstone of this market over the last month or so. Valuations again attractive, sectoral rotation into IT is happening. What would make sense within the software pack where you see improved performance not only in the stock price but also in the business of maybe frontline companies, mid-cap IT stocks? What would you prefer in this space, sir?
Actually, I mean, IT, the jury is still wide open. I mean, Q1 earnings update, where the only good part about was there was nothing negative about the earnings update. There were no downgrades on the guidance given by most of the large cap companies. They maintained their guidance. In fact, they raised the lower guidance a bit forward. They are sensing more stability into the market, but real picture will open up only after the US elections. I mean, then depending upon whosoever takes the government and whatever is the policies, the companies in US would be opening up with their budgetary allocation to most of the IT companies. As of now, I mean, what we have seen, even the existing businesses have seen some trimming on the renewal of contracts. So one is because of the budgetary problem. Then the second part is more to do with the AI-enabled softwares, which most of the companies are now adopting, where the catch-up is happening. So by this year end, most of our companies would be equipped with the similar kind of a software offering to the client. So that is how the space looks like. In that space, we have tried to find out a relatively mid to small cap company like Infibeam, which is not outward focused. It's a fintech company more focused towards our domestic payment system. And there, I mean, valuations may look far richer based on the present earnings and the return on equity ratios, but they are coming out with few products on the AI base, which is more to do with fraud detection and security system. In fact, the government of India GEMS, the launch, it's entirely managed by this company. So there we are finding value. So, but here again, as you have rightly said, you have to stay invested for 2 to 3 years to see the real benefits coming into the play.
Yes. Right, the pre-open markets are upon us. The Nifty 71 points higher, 24,642. Remember, it's also the weekly expiry of the Fin Nifty today. Now, what's buzzing in the green as far as the 10 super index heavyweights are concerned? We'll start with Reliance, 9 rupees 20 higher, 29.86. Let's look at what Infosys is doing, 1.8% higher, up 34.20 at 1899. Remember, this uptick that you've seen in the market over the last 1 or 2 sessions, and in particular the way Nifty has managed to hold on to its most immediate lows, is mainly because of the strength that is coming into IT stocks. Let's sort of move a little forward. Tata Motors 1100 for you, 13 rupees 20 higher. What's in the red? Kotak Bank 6 rupees 35 down, 1775. What is also looking mildly on the back foot, Hindustan Unilever, although I'd just not be worried about it. Strong stocks, SBI and L&T are in the green, 1/3% higher on both of them. And of course, Bajaj Finance 33 rupees higher, 6650. This is how Nifty index heavyweights are structured. 57 points higher, 24,620. 29 for you. There was a huge gap down on Tata Consultancy Services TCS that's getting absorbed by the market, just 34 rupees lower at 44.55. It's now closing to a fresh record high. What else is buzzing within the Nifty 500 space? Let's look at the most active counters. Zomato, a block deal expected today to the tune of about 5,200 crores. Original promoter Antfin trying to sell anywhere between 1.54 to 1.9 percentage point stake in Zomato. Hindustan Zinc 4.5% lower, 496. The second day of the OFS for retail remains open. What also is interesting in terms of top gainers, it's Triveni Engineering from the sugar space, 12.8% higher, 468. This will settle down to sensible levels. Angel One 9.7% higher, 2369. Polymedicure, keep this one in your radar. This is doing phenomenally well as far as prices are concerned. KEI Industries 4% higher, 4550. There is a very well-known research report from an overseas FII that has given a huge buy rating on 3 cable manufacturers, among them KEI and of course Polycab. What else is in the move? Polycab at 6800 is 2.77% higher. This is how it is structured. In the most active counters in terms of gainers, you have KEI, which we've discussed, Polycab, Suven Pharma. This is interesting, 2.3% higher, 989 for you. Of course, metals are doing well. A very quick look into FNO, and then we'll go to Mr. Rudra Murthy. Okay. National Aluminium 1.2% higher, 174.6. Strong moves coming in on Tata Steel, 1.3% higher, 156. Let's get Mr. Murthy into the conversation. Is he with us? Yes. Good morning to you, Mr. Rudra Murthy. Any two stocks that you think will outperform in today's markets?
Shail, good morning and thanks for having me in the show. I will be picking Reliance as the top bet for me, and yesterday's chart pattern was very strong move and taking support at levels closer to the 2850 to 2900 zone, and the momentum started just yesterday. So for me that should continue with Reliance, and I will be looking for initial target of 3100, 3150 to come. One can definitely look at going long in Reliance, and this will support Nifty to move towards all-time high from now on. And I want to pick the second stock from slowly, might be a kind of a mid cap, and it is available to me in F&O. In fact, two stocks I will pick. One is IEX. For me, yesterday's move and day before yesterday's move in IEX is confirming me that yes, there is a lot of accumulation happening at current market price. I won't be surprised to see 240 to come on IEX very soon. Stock available in futures, one can definitely look at going long in IEX. And ONGC has been another stock which I even discussed last time. Even at current market price at around 330, 335, it offers a very good buying opportunity to me, looking at targets of 400 to come on ONGC with a stop loss of around 315. So it is a 15 rupee stop loss and a 70 rupee kind of a move, 1:5 kind of a risk reward on ONGC. And even IEX for that matter now at around 195, 196. Buy it with a stop loss of 190 for a target of 240. This is again a stop loss of about 5 rupees and looking at target of about 45 rupees, 1:9 kind of a risk reward from current market price. And also Reliance at current market price is a good buy. So for me, market will go to all-time highs where Nifty will outperform Bank Nifty even from here. And if I have to pick the top stock from large cap, it will be Reliance, seeing yesterday's price action. And if I have to pick from mid cap, a stock which is still available in F&O, for me it is buy on IEX and buy on ONGC. Both I will go long in futures, not advocating any buy in option, but better to go long in future to get the leverage as well as the move whatever you want with a good risk reward at current market price.
Right. So Reliance and IEX for you. Let's get into conversation Dharmesh ji as well. Rudra, before you joined us, Dharmesh ji picked out two stocks, value buys actually, based on research conducted at Cholamandalam Securities, which of course he heads. The names are Natco Pharma and Narayan Hirdalia. What are the medium term charts? I am not interested in what is happening today, tomorrow. I just want a nice 6 month, 1 year, 2 year view on what Natco Pharma is capable of and what Narayan Hirdalia is capable of. Dharmesh ji has suggested a SIP mode. Buy these stocks monthly. What are your charts telling you?
Shail, I am very clear. One on Natco Pharma or any stock you want to pick to your portfolio and do SIP and hold it on. I will always first see the downside before I see the upside. Because for me, if you take care of your losses, profit will take care of itself automatically. You don't have to do anything for taking care of your upside. So for me, this at current market price offers a great risk reward. Natco Pharma, yes, I agree with Dharmesh ji that you can buy this and have it in your portfolio. I will keep a stop loss of around 1,150, and I know it is bit deeper from current market price. I will buy at current market price, keep accumulating it on dips to 1,200, keep a stop loss of 1,150, and I'll be looking at target of around 2,000 to 2,500 for Natco Pharma from even current market price. So definitely good stock to buy, and be prepared for that kind of a stop loss of 1,150 and keep 1,200. That is about Natco Pharma. So another pick, Shail, which is the second stock you wanted me to give chart view.
Sir, it is Narayan Hirdalia from the hospital diagnostic space. What we'll do is, ladies and gentlemen, we'll get Rudra refixed. There is some problem with the connectivity for the moment, but a very strong view coming in on Natco Pharma. On the technical charts, fundamentally, of course, it's been analyzed threadbare by Dharmesh ji. Let's just look at some views coming in from the market. And yes, Dharmesh ji, what would your view be on cable stocks? KEI Industries, Polycab. I hesitate to ask because the run-up has been very sharp. Valuations, according to me, are stretched, but there is no stopping them. Today's research report points to super high targets on KEI and Polycab. What would be your considered view?
See, if you look at the business and the way things are shaping up, there is no stoppage out there. I mean, both these companies will be doing good on the business front, and the best part is the commodity prices have not gone anywhere. So they have largely contained, and that is what will keep the margins intact. The only worry, and I mean, there is no justification for such a high valuation based on the type of companies these are. These are not disruptive companies. They are simple material suppliers. So, and I mean cable suppliers. So that is where the big worry is. And what we, I mean, the general recommendation would be, if you are a buyer, keep it in your portfolio and stay invested for 3-4 years, and eventually good returns will be made, even if it slows down from the current pace. But not fresh buying into. I mean, other case in point, though not from this industry's trend. So like the way the stock is climbing, nothing wrong with the business model, nothing wrong. They will continue to deliver good set of numbers. So, but if you look at the valuation, I mean, under any stretch of imagination, it's very hard to justify that.
Yes, absolutely. So if you're lucky enough to have KEI Industries and Polycab in your portfolio, this is not the time to sell. Hold on. And again, like I've said, it's difficult to sort of suggest a fresh entry at current levels. So for those who are already on the bandwagon of cable and wire companies, stick around. I think Mr. Rudra Murthy should be back in a while. Let's continue this discussion, Dharmesh ji. Within the cable and wireless space, actually cable and wire space, wireless. Anything that catches your fancy in terms of stocks that are present. You have Havels, you have RR Cabell, which was recently listed. Anything that looks good?
Shally, I mean, we are just stepping back from any infra spend kind of a company. So, be it real estate or material suppliers, cement, cable and wires, and even infra construction companies like L&T, NCC, and all. I think this year it will be a more of a year of a consolidation. I mean, business-wise, they will continue to grow with same run rate, but the type of valuation premium which market is giving them now will definitely come under a check. So I don't see much of a price traction happening in any of these companies from where we are sitting. It may be a time kind of a consolidation which happens out there. And eventually that fundamental has to play out. So right now we are in a euphoric moment. But portfolio allocation by most of fund managers and all, if you are having a conversation with, they are also a bit on a sidelines in such companies. So it's more of a HNI and retail driven kind of a money which is chasing the stock. So I mean, sincere advice would be if you are invested, stay invested. Nothing wrong out there. But fresh allocation should be avoided from entire construction and infra space.
Okay, fair point. Let's get Rudra into the conversation. A minute and a half left, Rudra. You got freezed. We were talking about Narayan Hirdale on the fundamental side, which Dharmesh has found favor with. What are the charts of this hospital stock telling you?
Shail, I am very clear this is consolidating. Yes, Dharmesh ji has picked a good stock in terms of fundamentals and valuation comfort also. But I will keep a strict stop loss below 1150, which is just about 40 rupees from current market price. Buy it. And yes, this stock will gain momentum once it crosses 1320, 1350 zone. So till that time of 1350, it might consolidate time wise. And once it makes a move above 1350, you will see momentum coming into the stock, and yes, it can move towards 1500, 1600 initially, and then further from there 2000 rupee can be seen on Narayan Hridayalaya. A very, very good stock to have in your portfolio. And yes, keep a stop loss of 1150, buy it at current market price, add more above 1320, 1350 zone, look at targets of around 1600 to 2000 on Narayan Hridayalaya.
Okay, ladies and gentlemen, we'll now shift our attention to the opening quotes on the Nifty. 60 points higher, 24,628. Let me just first clear the air. It's in the green. Everything is in the green. So it's a nice opening quote. The IT index is 0.5% higher, double century already, 41,443. The Nifty Bank and more importantly, the Nifty 500 index are in the green as well. Now let's drill down into stocks that are helping the Nifty on its way up. Okay, Reliance 18 rupees 20 higher, 2995. Remember, it's the top pick by Rudramurthy sir for today. Infosys in the green, 9 rupees 15 higher, 1874. TCS taking it away 1% higher. I believe this will be a record high, 45.41, 47 rupees higher. So all out of all 10 major index heavyweights, we have 9 of them in the green, which is a good positive sign for the index on the day ahead. What about banks? Okay, HDFC Bank for the moment is 2 rupees 70 higher. ICICI Bank is 1 rupee 30 higher. Kotak is a rupee 30 higher. Axis 4.5 higher, and SBI. Let's look at what SBI is doing, a rupee higher. Now we'll shift focus to top gainers in the Nifty 500 space. What is the market saying? Okay, the block deal on Zomato, the turnover is very high, already 577 crores have been traded, 0.5% lower at 260. We'll keep an eye out on this one. The block has already happened. 19.26 crore shares have changed hands in the block window. Okay, let's look at top gainers now. Polycab 4% higher, 68.80. Praj Industries 3.6% higher. This is the sugar ethanol play coming into the market, 781.20. KEI Industries 45.08, 3.6% higher. You have energy space in the green, HPCL, BPCL, both 2.5% higher. And giving company to Polycab and KEI Industries is another recently listed cable company, RR Kabel, 1693.3% higher. A very quick look onto the broader market, and then we'll go to Rudramurthy sir. Okay, advanced decline is fairly strong, 4:1. 1676 stocks are in the green compared with just 400 which are in the red. We track 19 indices for you, ladies and gentlemen. Okay, 17 are in the green, led by the IT index, 0.7% higher. Okay, let's now get to Dharmesh ji in terms of what he thinks is this kind of a market open. Fairly happy, sir. Nothing to be worried about in terms of how markets have opened. How do you see anything that catches your attention in the pre-open trade?
Yeah, I mean, the opening is on expected lines, and it's holding on. And the best part is the market depth, which you spoke about, that it's been a 4:1 kind of a AD ratio, and that's always very good to look at. So traction is happening, and everywhere, wherever there is a positive news flow surrounding the company or stock, it's being lapped up by the markets. I think today it should be the day. I mean, from here till FOMC policy announcement, IT stocks should be looked into. So any declines out there, one should be buying into that with decent upside momentum taking forward. So maybe Infosys, TCS look attractive from the large cap IT basket. The bank somehow is struggling. So how much upside you can get by getting into a banking stock will be difficult to judge. So my own sense is IT and metals. So metals has seen a good decent traction yesterday in the trading session. Today also I think it's likely to pick up, because the reason being because of the weakness in dollar index, metal prices overseas have climbed up, and that is just helping the sentiments. And back home we have
Yes.
the double advantage of not only the prices going up, at the same time the demand remains intact. So that is one space one should be looking into. Maybe a JSW Steel or a Hindalco offers a good bet on the metal side.
Okay, I think we'll also look at pharma, because the index is showing strength. Let me just point out the pharma index for you. For the moment, it's 1/3% higher, 22,304. And within the pharma space, there is Sun Pharma about 0.7% higher. That's doing pretty well. You have a strong move at 1760 coming into Sun Pharma. Not only is it a daily high, it's also at its highest level in a week, and posting a record high 4680 on Divi's Pharma, Divi's Labs. Please keep an eye out on both these stocks. A strong move coming into here. As far as Nifty is concerned, the top gaining stock is BPCL. This is about 2% higher. And what's really interesting is that only 3 stocks in the Nifty, and they are Grasim, Titan and L&T Mindtree, which are in the red. 47 are in the green. That basically points to a strong show coming in from the bull side. The index still a modest 48 higher, 24,623. Let's get Dharmesh's view on the energy space. Lots of quality names, Dharmeshji, being talked about in the market. ONGC, BPCL, HPCL, where the government might take steps to create longer term shareholder value. Although these are already at record highs, but valuations here against are extremely modest compared with the broader market and broader sectors. What would your view be on the energy space and your top picks there, sir?
I think, I mean, as far as ONGC is concerned, it's a contrary to whenever the oil price is correct, they should be losing on the profitability side. And refiners do tend to gain because there is no pressure of subsidy coming into the play because they have a ceiling limit beyond which the problem starts with most of the refiners. I think it's more of a cyclical play. And valuation wise, the run up last 3 years have seen a good run up in all these counters. So now they are priced to perfection. So I would be avoiding most of them. What I would buy right now is Reliance Industries, which offers you a play of all segments into one until the demerger happens of its businesses. I think it's a stock which one should be having in their portfolio and continue holding them, because you have oil and gas, you have refining, you have retail business, and you have a telecommunication business, all playing into one, and not to forget the new energy business which they would be going forward into. So one is a pure bet on the management and their capability of turning around any businesses they take on. And the second part is the sum of part valuation is far higher. I mean, just based on 1 year forward-looking earnings, sum of part comes to be 36, 3700 kind of SOTP valuation on Reliance Industries. So if you extrapolate that to say 3 or 4 years, the valuation can be far richer than where they are trading right now.
Okay. 9:23, ladies and gentlemen, Mr. Rudra Murthy is with us. Mr. Murthy, what would be your first step in the market? Anything that looks good? The Nifty is up 58 points, and for the moment it is facing a lot of resistance from its monthly pivot, which is at 24,650. What looks good in the market on the long side or the short side?
Looks good for me. Today the stock has come out of ban and available for one to go long in futures. The morning price action has been positive, and in futures I would love to buy Biocon at current market price of around 350, and I will keep a strict stop loss, might be about 1% below current market price, and looking at targets of around 370, 375. Good risk reward to enter at current market price. Another stock if I have to buy, GAIL, available in futures. GAIL for me after yesterday's move is continuing the move on the upside. Yes, one can look at targets of around 260 on GAIL, available in futures. Go long in GAIL, go long in Biocon. And overall, when it comes to Nifty, Bank Nifty, see today's move in Nifty after what it made a move on Friday tells to me that yesterday was more a consolidation, and today again market is definitely looking strong to me. Not a market to short as of now, or at least today based on the price action what we have seen till now. And another good thing is today Bank Nifty is also supporting Nifty. Yes, I understand it is hardly a 50-point up move in Nifty and a 70-point kind of a move in Bank Nifty. But then for me, Reliance is holding today, HDFC Bank is holding today, which is good, and metal should continue outperforming and picking stocks like GAIL and Biocon. So all this tells to me that definitely I will not be in general on the short side of market. I will be a buyer, and I will be keeping strict stop loss on Nifty, might be at around 24,550, and look at targets of 24,800 to 25,000, and Bank Nifty should head towards 51,000. But still I will bet on stock specific calls, looking at stocks like, let us say, Reliance, look at even Vedanta for that matter, look at GAIL. So these are all stocks which can do good.
Right, two specific stocks that I have in mind and I want to point out are record highs. Praj Industries taking it away 6.5% higher, 800 rupees. Remember, it's the sugar slash ethanol story that's running across the markets. Praj Industries makes a lot of equipment that goes into creating ethanol out of sugar. A very quick one from you, Rudra, on Praj. Is this a momentum worth chasing at 800 rupees, already a record high?
Yes, definitely. This is a stock one can have on their portfolio, and even for trading, buy it, because today it has clearly broken that resistance or a short-term consolidation which was at around 755 to 760. So yes, I will chase this momentum, buy even at current market price, but keep a stop loss only below 760, which is the breakout zone, or buy some portion now, add more closer to that 760, 770 if you get any dip tomorrow or day after, and then hold on. I am giving 1,000 rupee target on Praj Industry, keeping a stop loss of 720. Buy at current market price and on dips to 770, and look at targets of 1,000 on Praj Industry.
Okay, Dharmeshji, your view on Praj, is it overpriced, worth it, or should we just stay away?
Shailji, if you look at the history of Praj, it was always overpriced. I mean, valuation multiple, it has never delivered that kind of a growth. Yeah, conceptually, story-wise, things have always worked. I mean, it's around building, and earlier it was water purification, and those kind of concepts have always changed this industry. Having said that, business-wise, whatever they have been delivering, they have been very stable. There has not been any fluctuation in the earnings which they report. They are able to maintain their margins and the cash flow. All those things are intact. What is helping in the recent momentum is the confusion regarding the electric vehicles. So, essentially, we are living in India, and here the resale value matters a lot. So the problem with electric vehicle buying is first 3-4 years can be very good, but after that, people are finding it hard to discover the resale value of electric vehicles after 3 or 4 years of running cycle, because battery usually tends to weaken. 4 to 8 years is the maximum, shelf life of the batteries out there, and that is the challenge out there. And people are preferring hybrid kind of a vehicle more than pure electric play, and that is where I think Palaj again comes back into action, and it is enjoying its trend. And the government of India has time and again reiterated 20% ethanol building can be faster than the time limits they have set for. So these are more thematic plays, conceptual plays which are playing out. Valuation wise, I have never ever, find it attractive to get a fresh entry into large industries.
Okay, fair point. That's the view coming in. Again, with all due caution at my end, I'm marking CDSL for you, 2931. Remember, this is a very well appreciated stock by the market, record high. It's headed for a split 1:1 bonus that will become effective on a record date which is fairly close by, I think August 26th if I'm not wrong, and therefore you see this mad rally that is happening. I hesitate to take a technical view. I just want Rudra sir to sort of comment on what he feels are the charts of CDSL telling him.
Shail, very clear. This is a stock which gave you opportunity to enter about a month back, levels closer to 2,250, 2,300, which was a good buy. And I will say
Yes,
at current
yes.
market price, yes, it is bit expensive. See the move which it has given last 2-3 days, and now buying here may not offer a good risk reward if you are a trader. But I will still tell you, if you have CDSL, hold on. If you want a fresh entry, look at somewhere closer to 2,600 if you can get it there, or else I will hold on if I have it or give a pass.
Fair point. Would you want to comment, Dharmesh ji, on CDSL's performance?
Yeah, definitely, Shailji. I mean, any CDSL, BSC, this should, if you are having a time horizon of say next 10 years, be invested. Because the type of traction which we have seen in the demat accounts and
Okay.
more and more, at least see it right now, rough estimate suggests around 35 to 40 crore of the population are earning population of country, and they have this space savings at place to be deployed into the equity market. As of now, we are running around 15-16 crores of demat accounts. So a doubling of that is always a possibility. Value-wise, transaction-wise, I am not going into that.
Yes.
Scheme. And secondly, whether you buy or sell, in both, I mean, brokers also, there is a broker's being charged, and the fees are earned by the exchanges, and demat account, deposit is like the CDSL. So it's a clear win-win situation. Recently, if you are looking at 2 years or 3 years perspective, it looks very damn expensive. But if you are having a 10 years kind of a horizon, way to go far from here. And I think after NSE gets listed,
Yes.
I mean, once the process is through, then the fair value one can arrive at. Till that time, it's a momentum which is chasing them, and it will continue to chase them.
Okay, ladies and gentlemen, also we've observed that once the X bonus or X split becomes effective, normally stocks go through a corrective as well as consolidative phase. Even if you take a 1:1 now, this would be somewhere like 1450, 1400 rupees for CDSL. Now wait for that X split or X bonus to happen, and then maybe after 2-3 months when the stock has eased out, because normally you see a lot of enthusiasm coming into the counter pre-bonus. That's already happened, and then is the time to probably add CDSL to your long-term portfolio. Okay, I'll request both guests to allow me a moment in highlighting the market. I'd just like to point out some good moves that are coming in. Okay, ladies and gentlemen, Edelweiss from the broking space doing very well, 5.3% higher, 96 rupees for you. Angel 2% higher, 2387.3. That's a strong move that is coming in. Let's look at what defense is doing. Okay, you have Midhani. This is the metals maker from the PSU stable, 1.5% higher, 441 for you. What's in pain, as I had pointed out, heavy selling pressure and heavy profit booking happening in Marsgaon, 3.5% lower. Garden Reach 3% lower. You have Cochin Shipyard 1.9% lower, and of course BDL and HAL down about 0.5% each. What is taking it away is Whirlpool, 2192 up 4%. Dharmeshji, one of the major block deals that happened with parent companies reducing stake in their Indian MNC units was Whirlpool, I think at 1200 rupees. At 2100 rupees, all those mutual funds who bought in bulk are laughing all the way to the bank. How would you analyze Whirlpool for our viewers at this stage, sir?
See, from business perspective, I mean, Whirlpool, Voltas and all, I think they have seen the best of the business cycle playing out. And from here on, it would be more of the valuation will come into perspective where they looks very heated up. And that was a hang on Whirlpool, that overseas investment, that has gone away now. And that is what is being liked by all the fund managers out there. And see, again, once you are running a thematic kind of mutual fund, then you have to stay with the theme, and then you have to buy the stocks which are catering to that kind of portfolio. So these are very illiquid counters. You don't have availability of shares in the market the way for liquid counters are. So small buying creates a nice price action, and there are no sellers. So the entire market technical parameters are working. You don't have sellers, you don't have liquidity, and you have buyers out there. So prices do rise much of the valuation multiple. So, but what we are advising is to take profits out there. I mean, when the client is inquiring about Whirlpool and Voltas at current levels, we think the best is done for this year. So it's better off to take profits, and maybe 10-15% kind of a correction happens, then we'll reassess.
Fair point. That's a sensible view coming in. Let's get Rudra into the conversation. We are almost 20 minutes into the market. Anything, Rudra, that has caught your fancy on volume build-ups, breakouts in prices, breakdowns in prices? What looks good on the charts?
See, for me, another stock from the futures pack available in F&O and also showing momentum after yesterday's move is Vedanta. So for me, Vedanta at around 440, 445 range is a good buy. Risk reward is great to buy at current market price. For me, metals can continue the rally what it started yesterday. So I will be a buyer in Vedanta. Another stock which looks good for me for momentum play and which is showing that sign to me is GAIL. Look at GAIL, even in this market up 1% and definitely showing strength. So these two stocks, looking at screen and the momentum and also continuation of the strength what it has shown yesterday, I would definitely advocate a buy in them. So if I have to go further more deeper and try to find some more stocks, yes, look at even the move today, HDFC Bank is showing, and Reliance after yesterday's move continuing the move from yesterday. I am crystal clear, if HDFC Bank and Reliance support the market for very short term, there is no shorting opportunity in general. If Bank Nifty starts supporting the market, Nifty will hit all-time highs much sooner and Bank Nifty will follow that. HDFC Bank and Reliance will be those two stocks which will take Nifty higher and even closer to that all-time high level. And if you have to pick something from stock specific available in future, I have given three names to you. One is Biocon, second is Vedanta, and third is GAIL. For me, another stock which looks very good here is Coal India, and even PVR for that matter looks very strong at current market price. So if you want to accumulate some stock for momentum trade, look at names like Coal India and even PVR. They all look strong to me. No shorting whatsoever. HDFC Bank and Reliance will lead Nifty to all-time highs sooner than later.
That's a wonderful view that is coming in. If you do not agree with the trend that is there in the market, ladies and gentlemen, please stay out, remain on the fence. This is not a market to short. What we have seen over the last 15 trading sessions that have happened in August, that the Nifty on an intraday basis on charts of 75 minutes refused to let bears dictate the sentiment. It just passed time during the yen carry trade unwinding, during the SEBI Hindenburg crisis, during modest to lower earnings that came in the first quarter. It just consolidated, and now perhaps as it battles its monthly pivot level at 24,650, if it closes above 24,650 today, then the trend will turn for the positive, and as Rudra sir says, you just might see a fresh record high coming in. What are the stocks that are helping the Nifty on its way up? TCS 18 points in the green, Reliance 11 points in the green, Infosys, Axis and NTPC 8, 6 and 3 points contributing to Nifty's positive 77 point uptick. Bank Nifty is 200 points higher, but taking it away is the Nifty IT index driven primarily by TCS. Two things I want to check. Is the IT index at a record high? Just a moment please. Yes, ladies and gentlemen, we have a record high on the CNX IT index. And do we have a record high on TCS? Yes, we have a record high on TCS as well. Mr. Murthy, before we let you go, a very quick one on TCS.
Shail, yes, IT as a sector is definitely outperforming, and this will continue. In fact, mid-cap IT can now take the baton and run further from here. But yes, when it comes to large cap IT, for me both TCS and Infosys looks good on chart. If you want to specifically mark the prices on TCS, yes, above 4,430, it has given a breakout, and stock sustaining above 4,430 is very good. At current market price, definitely trading above that 4,430 mark. Buy on TCS, buy on Infosys, and from mid cap if you want, look at First Source. And for me, Tech Mahindra also looks very strong. So Tech Mahindra, First Source, TCS, Infosys, all on the buy side.
Fair point. With that, Rudra will thank you and let Dharmesh have the final words. You generally don't sort of chase momentum, Dharmesh, but I'm forced to ask you on TCS.
I think, as far as valuations are concerned, we had a target of 42,000-43,000. It's well above that now trading, and the expectation is that clouds will clear in the US horizon, and they would be start getting multiple order flows, and TCVs would be far higher. So that is what is chasing the stock price. At the same time, downside seems to be restricted. Fresh entry again, Shalji, I mean, would be advisable at current levels. So if you are invested, stay invested, and that is a call on TCS as of now.
Fair point. For those fortunate enough, remain invested. Dharmesh, my deepest thanks for you. You had shared that very valuable report from Cholamandalam Securities on value buying at current levels. I am just repeating those stocks which Sir had pointed out to be accumulated in SIP fashion. Natco Pharma from the pharmaceutical space, from the hospital space it's Narayan Hridayalaya. Two banks that merit attention are Bank of India and Canara Bank, and from the IT digital payment space, a little known company called Infibeam Avenues, available at 30 rupees. Remember, these are all long-term holds, more than 2 years each, to be purchased on a monthly basis. Thanks once again.
Thank you so much.
It was a pleasure to host you, sir. With that, ladies and gentlemen, let me just wrap the markets for you. It's already 9:41. The Nifty is now, ladies and gentlemen, above its monthly pivot, and that's a very, very good thing to happen as far as bulls are concerned. It's inched above 24,650, which was a very, very crucial, a very, very difficult resistance to navigate. Let us hope that it closes above 24,650 in today's trade. What else is buzzing apart from the Nifty? You have a strong flow of fresh money coming across the market space, which is visible in the advanced decline ratio, 1600 stocks in the green compared with 600 in the red. The Nifty 500 index is 1/3% higher. Out of 500 shares, 327 are in the green. In the mid-cap space, the mid-cap 100 index is 0.25% higher. Out of 163 stocks are in the gain. The small cap index, out of 100 stocks, 69 are in the green. And we have a strong move on the Nifty 550, as also across the board we have 16 out of 19 indices trading in the green. News will continue on Business Today television, ladies and gentlemen. Remain glued to that one, and I'll call it a day for here as far as the daily coverage of the markets are concerned. We'll meet tomorrow morning on Wednesday. Thank you so much for your time, sir.
Prime Minister Narendra Modi promises a developed India by 2047 and aims to make India the third largest economy in his third term. The third edition of Adani Business Today, India at 100, charts the course.
This is clearly India's golden moment.
A future-ready India, decoding the mega trends of Mission 2047. The biggest names in business, the top policy makers. Discuss what it will take to fulfill the Viksit Bharat dream. Join Adani Business Today, India at 100 on August 20th, live across the Business Today multiverse.
Journalistic enterprises have two fundamental problems. One is